Welcome to the Deep Dive, the show where we sift through the noise and pull out the absolute most important nuggets of knowledge.
Hmm.
Today, we're plunging into a truly fascinating corner of the global economy, the Indian automotive market.
Yeah, it's definitely an interesting space right now.
It really is. It's a place where, you know, challenging macroeconomic conditions are somehow meeting surprising resilience. A real paradox, wouldn't you say?
It absolutely is. You read the headlines about economic slowdowns and softened demand, yet when you dig into certain companies, you find they're not just surviving,
Right?
they're strategically thriving, almost counterintuitively sometimes.
That's precisely what we're here to unpack. Our mission today is to take a deep dive into the unaudited, standalone, and consolidated financial results for Hyundai Motor India Limited, or HMIL,
Yeah.
for the quarter ended June 30th, 2025. We want to understand the real story behind their performance, the broader market context they're navigating, and how a major player like HMIL is actually planning for the future amidst these economic headwinds.
And to do that, we've gathered some pretty robust sources. We've meticulously gone through their official financial reports, gathered insights from their statutory auditors,
Okay.
and we listened to the incredibly detailed Q&A session from their recent earnings conference call. It was quite comprehensive.
That's a lot to work with.
Definitely. This comprehensive look really allows us to pull out the most important insights and give you, the listener, a truly granular understanding.
Okay, let's kick things off then with the big picture. HMIL's performance and strategic wins for Q1 of FY26. So that's April 1st to June 30th, 2025.
Right, the first quarter.
The headline figures immediately jump out at you. Consolidated revenue from operations hit INR 164,129 million.
That's a big number.
Yeah. Their consolidated profit after tax, or PAT, that's essentially their net profit after all expenses and taxes, was INR 13,692 million,
Which translates to what kind of margin?
which works out to a healthy 8.2% PAT margin. And their EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization.
Gives you that core operational profitability picture.
Exactly. That came in strong at INR 21,852 million, resulting in a robust 13.3% EBITDA margin.
Wow. And what's truly remarkable here, and ties back to that initial paradox you mentioned,
Mhm.
is that these Q1 FY26 margins for EBITDA, EBIT, and PAT were actually better than HMIL's full-year FY25 margins.
Better than the full year before.
Yes. This isn't just strong operational control. It's really a testament to their, let's call it, crisis-proof strategy.
Turning headwinds into an advantage almost.
Exactly, where others might falter. It shows incredible agility.
That focus on strategic agility sounds incredibly disciplined. You mentioned their stated strategy, quality of growth.
Yep.
What does that really mean in practice for a company like HMIL?
Well, it's about finding a balance.
How do they balance that against, the sheer volume other players might be chasing?
It's all about balancing domestic and export sales, market share, and crucially, profitability.
Hmm.
They're not just chasing raw numbers.
Mm.
They're ensuring that the growth they achieve is sustainable and profitable in the long run. And a key lever in this strategy has undeniably been exports.
Exports, okay.
HMIL saw a remarkable 13% year-on-year growth in export volume. Shipped 48,140 vehicles in Q1 FY26 compared to about 42,600 in the same period last year.
That's a significant jump in their export game. And it's not just about volume, is it?
No, not at all.
Their export contribution to the overall sales mix improved to a healthy 27%. How does that position HMIL on the global stage, especially when the domestic market is facing headwinds?
Well, it really solidifies HMIL's position as a critical manufacturing hub, especially for emerging markets.
Like a strategic base.
Precisely. This export growth acts as a strategic buffer, allowing them to offset some of that softness in domestic demand. It showcases their operational flexibility, to shift focus and leverage different markets to maintain overall sales momentum and, crucially, profitability.
Okay, so while exports were clearly a lifeline, let's talk about HMIL's performance right here at home.
The domestic side, yeah.
Let's turn our attention there, where they also saw some undeniable victories. The Creta model, for example.
Ah, the Creta.
It's completed 10 years of leadership in the mid-size SUV segment, became the highest-selling SUV in Q1 FY26.
10 years is quite a run.
It's so dominant that the mid-size SUV segment in India is often unofficially just called the Creta segment. That's a pretty unique distinction, isn't it?
It really speaks volumes about the Creta's brand power and how deeply it resonates with Indian consumers. Another big milestone you picked up on
Yeah.
is the brand I-10. It surpassed 3 million unit sales cumulatively.
3 million. Wow.
Yeah, over 2 million sold in India and over 1 million exported. It really showcases HMIL's ability to create, world-class products that have broad appeal, both locally and internationally.
And digging a bit deeper, I found something really interesting. Their strategic push into rural areas.
Ah, yes, the rural strategy.
It's clearly yielding significant results. HMIL achieved its highest ever rural penetration this quarter, reaching 23%. That's
Yeah.
up from 19.9% in Q1 FY25.
And even up from the full year FY25 figure of 20.9%.
Exactly. So why is expanding into rural markets such a crucial white space opportunity for them right now?
Oh, it's transformative. Rural India is no longer just about basic transportation. We're seeing this massive aspirational shift.
Mm.
And HMIL is clearly tapping into that. Their strong service network, 586 rural service points and 110 mobile service vans,
Right.
combined with improved road infrastructure, means that rural customers are increasingly opting for more premium vehicles, especially SUVs.
So not just entry level anymore.
Not at all. It's a huge untapped segment that's proving very lucrative for them.
Okay, now let's go under the hood a bit. Let's decode how HMIL achieves such strong financial health and margin resilience, especially given the challenging market.
Right? Those margins were impressive.
We already mentioned that robust 13.3% EBITDA margin and the 8.2% PAT margin for Q1 FY26. What were the key drivers behind keeping those numbers so strong?
Well, there are a few clear factors at play. Firstly, as we discussed, the higher export mix.
Okay, more exports.
The export business tends to be more profitable just due to different market dynamics, pricing structures, that sort of thing.
Got it.
Secondly, significant material cost optimization efforts. Really significant.
How significant are we talking?
We're talking about a 70 basis point impact year on year and 50 basis points sequentially. Now, for those wondering, a basis point is 1/100th of a percentage point.
So 70 basis points is 0.7% of cost reduction. That adds up.
It really does. And it points to smart localization.
So it's not just about broad cost cutting, but strategic localization. They localized sunroof components last year.
It did.
What other areas are they focusing on for localization, especially looking ahead?
Exactly. It's about building a more resilient supply chain and reducing import dependence. They're making a concerted effort to localize critical components for their electric vehicles.
Ah, EVs too.
Yes, including the EV battery assembly packs. This isn't just about cost today. It's about future-proofing their EV strategy and reducing exposure to global supply chain volatility.
Makes sense. Any other factors?
They also benefited from strategic pricing. A price increase implemented back in January certainly helped support those margins.
Ah, the price hike.
And finally, there was a positive shift in their domestic model mix, particularly with stronger Creta sales contributing to better margins.
Because higher value vehicles naturally bring in more profit per unit.
Exactly.
But it's important to acknowledge that it wasn't all smooth sailing, right?
Definitely not.
Revenues and overall volumes were impacted by those challenging domestic market conditions. They saw an 11.5% year-on-year decline in domestic sales.
That's a notable drop.
And you mentioned higher discounts were a major drag on margins. Can you put those discounts into perspective for us? How much of a drag?
Absolutely. Think of it like this. They had to offer bigger discounts to move cars. Domestically, in Q1 FY26, discounts averaged about 3.4% of the average selling price, or ASP.
Okay, 3.4%.
Compare that to just 2% in the previous quarter.
Right, so quite a bit higher.
That's a significant chunk out of their profit margin on each car sold domestically,
Yeah.
like taking a bigger bite out of the pie before it even gets to the table.
Yeah, okay.
However, as we just discussed, those factors, those drags, were largely offset by the positive drivers like exports, localization, pricing.
So they managed to balance it out.
It speaks to a very disciplined and agile approach, I think.
That discipline really shines through. And digging a bit deeper into operations, I found something that could be a significant long-term play for them.
Oh.
HMIL also commenced passenger vehicle engine production at their new Telegon plant on June 16, 2025.
Ah, the Telegon plant coming online.
Can you tell us more about the strategic benefit of this new facility?
Well, this facility is designed to support both their Pune and Chennai operations.
Okay, bracing the two.
Essentially, yes. Significantly enhancing efficiency and enabling smoother production scaling across their whole manufacturing footprint. While its impact on Q1 financials was negligible, because it only started mid-June,
Right, not much time to show up.
it represents a crucial long-term investment in their production capacity and flexibility, It's about the future.
And for those keeping an eye on the books, their financial results underwent a limited review by their statutory auditors, BS R&Co LLP,
Yes, the auditors took a look.
and they found no material misstatement. Now, for listeners who might not be deep into financial audits, what's the distinction between a limited review and a full audit? Why is that important context?
That's a great question. A limited review is, well, less extensive than a full audit.
Less deep.
Exactly. It primarily involves making inquiries and performing analytical procedures. The goal is to provide a certain level of assurance that no major red flags or material misstatements were found.
Okay.
While it doesn't offer the same comprehensive verification as a full audit, it still provides a valuable level of confidence in the financial figures presented for the quarter. It's more like a snapshot, essentially, than a full deep dive audit.
Got it. So, given everything we've discussed, the market dynamics, the impressive financial health, what does this all mean for HMIL's future roadmap?
Where do they go from here?
Yeah. Q1 saw what the company describes as prolonged softness in demand and a challenging macro environment. June, in fact, recorded the lowest total industry volume in 30 months if you exclude December.
That's a pretty stark figure, yeah.
But HMIL anticipates a gradual recovery. What gives them that confidence? What are they seeing?
Well, there are several positive factors they believe are converging. They're banking on a good monsoon season, which, as you know, directly impacts rural demand.
Always key in India.
Absolutely. Then you have the critical upcoming festive season Navratras in September, Diwali in October, which traditionally sees a surge in car purchases.
The festive bump.
Exactly. But perhaps most significantly, the recent interest rate cuts. 100 basis points cut by the RBI. That's huge.
A full 1% drop.
Yes, a 1% drop in interest rates directly translates to more affordable car loans. That's a key driver, especially for first-time buyers, and could unlock significant demand for HMIL in the coming quarters.
Makes loans cheaper, basically.
Right. Add to that income tax relief that was announced, and the upcoming pay commission boosts. You have a recipe for a potential demand rebound.
It sounds like maybe a perfect storm of positive catalysts brewing.
They certainly hope so.
You also touched on evolving consumer preferences earlier. Let's deep dive into that rural surge again.
Okay.
Rural SUV penetration now stands at 68.8%. That indicates rural customers have become much more aspirational, doesn't it?
Absolutely.
What does this mean for how HMIL thinks about its product lineup and distribution moving forward?
It kind of redefines their entire strategy for rural markets. It's no longer just about entry-level cars, like we said.
Right.
Rural customers are seeking the same modern features and capabilities as urban buyers: better ground clearance, improved visibility, standard safety features like 6 airbags.
6 airbags, a standard, is becoming important.
Very much so. And even lifestyle features like sunroofs. This is why you see customers in that, say, 6 to 8 lakh rupee segment shifting from traditional hatchbacks to compact SUV.
Like HMIL's Exter.
Exactly, like the Exter, or competitor models like the Punch. HMIL is responding by providing, world-class products designed for these aspirational rural buyers.
That's a clear shift in the market. And it's also interesting to see the significant increase in first-time buyers across HMIL models.
Yeah, that jumped out too.
Now at 40%, up from 32% back in 2020. Even for models like Creta, it's jumped to 32% from just 13% in 2020.
That Creta number is especially surprising. A 13 to 32 jump for first-time buyers.
What's driving this surge in new car owners?
It seems to be a combination of factors. Increasingly accessible financing options, definitely. A younger demographic entering the car-buying market.
Younger buyers.
And surprisingly, they mention children having a greater influence on purchasing decisions within families.
Interesting. Kids influencing the car choice.
Apparently so. This trend signifies a broader market expansion opportunity, bringing more people into the automotive fold for the very first time.
And on the fuel mix side, they saw a record-high CNG contribution.
Yes, CNG is huge for them right now.
Nearly 16% overall, 89% for the Aura model, and over 30% for the Exter, largely supported by their dual-cylinder technology and offering new variants.
That dual-cylinder tech made a difference, making CNG more practical.
How does this significant shift towards CNG help HMIL, particularly with regulations?
Oh, it's absolutely critical. Critical for meeting their CAFE norms targets. That's corporate average fuel economy.
Right, the emission standards.
These are regulations that require manufacturers to achieve certain average fuel efficiency standards across their entire fleet. By offering popular CNG variants, HMIL can bring down their fleet's average emissions and fuel consumption.
Which helps them avoid penalties.
Exactly. and it demonstrates their commitment to greener mobility within the current market realities. While their EV contribution was, what, 1.4%?
Yeah, 1.4%.
CNG is clearly playing a huge role in their immediate environmental compliance strategy.
So it's a strategic pathway to compliance while they continue to build out their EV offerings.
Seems like it, yeah.
This brings us to HMIL's strategy of democratizing global technologies and premium features.
Making premium more accessible.
Right. They've sold over 1.1 million sunroof-equipped vehicles in India over the last 5 years. That's a lot of sunroofs.
It really is. Shows the demand is there.
And their ADO's advanced driver assistance systems features now contribute 12.5% to overall sales across 8 models. How does this premiumization strategy differentiate them in such a competitive market?
Well, it allows them to bring features that were once, exclusive to luxury segments into more accessible price points. It elevates the driving experience for a broader audience.
So value perception.
Definitely.
Mm.
HMIL is leveraging its access to technologies from developed markets to offer features like, say, in-car payment, even in lower variants and new models. This focus on technology and premium features isn't just about selling more cars today.
It's about brand building.
It's about building brand loyalty and that perception of value, absolutely. And on the green technology front, they recently unveiled the design of the Hyundai HCWO Innovation Center,
Yes, the hydrogen initiative.
an R&D hub for green hydrogen technology, in collaboration with IIT Madras and the government of Tamil Nadu. This signals a serious long-term commitment to alternative fuels beyond just EVs.
That's a huge statement about their commitment to sustainability, looking further out.
It is indeed.
Looking ahead then, HMIL has big plans. They'll host their first ever Investor Day on October 15th, 2025 in Mumbai.
First ever. Interesting.
What should listeners be looking out for at this event? What should we expect?
This Investor Day will be crucial, I think. It's where they'll unveil their near to midterm plans, including more details on that previously announced launch of 26 new products.
26, including facelifts, right?
Yes, including facelifts by the end of financial year 2030. You can expect insights into their powertrain diversity strategy.
How they'll balance everything.
Exactly. How they plan to balance petrol, diesel, CNG, hybrid, and EV offerings, and other strategic initiatives that will define their trajectory for the next half-decade or so. It should be very revealing.
Okay, one final important detail for you to keep in mind, which could have future financial implications, are the Environment Protection End-of-Life Vehicles Rules 2025, the EPR rules.
Ah, the scrapping policy.
These became effective from April 1st, 2025, and they obligate the company to scrap end-of-life vehicles. How is HMIL navigating this new regulation?
Well, it's a significant new responsibility for all manufacturers. However, as things stand, due to the current absence of a clear pricing mechanism and a centralized online portal for these EPR certificates.
The practical details aren't worked out yet.
Not fully, it seems. So HMIL has stated they have not yet recognized a specific financial provision for this obligation in their Q1 books.
Meaning they haven't set aside money for it yet.
Correct. This indicates that once those details are clarified and the infrastructure is actually in place, it will represent a new quantifiable area of future financial impact for the company. It's definitely something to watch in future reports.
Definitely. Okay, so to recap this deep dive then, what we've seen from HMIL is a strategic balancing act.
That sums it up well.
Navigating domestic challenges with impressive export strength, achieving remarkable margin resilience driven by smart localization and a positive product mix, and clearly laying out a detailed roadmap for future growth and innovation in India's dynamic automotive market. It truly is a comprehensive strategy they're executing.
They're clearly playing a long game, adapting to shifting consumer demands, adapting to regulatory landscapes, all while maintaining that sharp focus on their quality of growth philosophy.
Exactly. So as we wrap up, here's something for you, the listener, to consider. A thought-provoking question, perhaps. Considering HMIL's aggressive localization efforts, their ambitious product pipeline, and their strategic focus on emerging market trends like rural demand and alternative fuels, how might their quality of growth strategy redefine success in the competitive automotive landscape of the next decade, especially as new regulations like those EPR rules solidify?